And now turning back to the major indexes, joining me is Michelle Schneider, Managing Director of the Market Gauge Group and author of Plant Your Money Tree, a guide to growing your wealth. Michelle, it's always great to see you. We're both in blue. The market's kind of feeling blue today as well. What's your take on the market action?
Well, yes, I did notice that we have both in blue, as is the market, as you said. It's interesting because there's a couple of really key things to watch right now. Obviously, we have jobs report tomorrow, and coming on the heels of what the Fed said yesterday, we know they're looking very carefully at labor. And that's probably will be an indication of what they're going to do, or at least what their intention is. But then we also had some manufacturing numbers come out showing that we're seeing a lot of economic slowdown. And this really basically defines what's going on is the market is spooked with fears of a recession, fears with continued inflation, and yet also has a lack of credibility that the Fed is going to be able to maintain this in the final hour because it's killing certain areas of the economy already. And so right now, that's what we're seeing. We still have the bottom in place, particularly in the small caps from June. We've already sold off from our great rally that we had last week. And it'll be interesting to see what happens with the dollar, which got stronger, and the long bonds, which actually saw a little bit of yields flattening here.
So what do you think investors should do, Michelle? I mean, should they wait it out? Should they keep their money in cash on the sidelines, perhaps waiting for a new bottom and a bit more clarity from the Fed?
Well, again, that's a really good question because we have a couple of things coming up yet that will really maybe influence the market. Midterm elections obviously being the one that everybody's looking with all. Historically, hasn't really had that much impact on markets in the past. Also, we have PCE coming up, which is probably the other biggest thing that the Fed looks at. That will be next week. So while the market is working it out, I think if you're trying to find a bottom, that could be dangerous. At the same time, in a bear market, if you're trying to buy rallies, we can see how that works out. So I might be a little bit more patient, give it a couple of weeks. We've started investing in things that we believe have value because they're more in terms of tech, not the big cap stocks. And in terms of the rest of the market, they're really more tied to the small caps, biotechnology. But otherwise, I think it's okay to be conservative at this point and see if these things play out and the market holds.
Do you think the Fed has lost its credibility? And I ask because many people have said for a long time that it was behind the curve. How was it the case that in September of 2021, inflation was transitory? And that definitely did not play out. And now we continue to see a lot of these risk assets suffer in the wake of more aggressive rate rises.
I have to say, Kristen, that's probably my biggest concern for 2023 is not only that the central banks have lost and will continue to lose credibility, but even sovereign governments, including here in the United States, as they're trying to catch up on a monetary policy without giving the markets any chance or the economy to digest 4 raises in a row, which, as we know, is historical. So, yeah, I think that that's going to be something we have to watch. And the best way to watch that, at least the tip that we're giving here and we're looking at, is what happens with the U.S. dollar. Because in the face of these higher raises in the interest rates, we've seen a higher dollar. But if the dollar starts to move lower in the face of all of that, that could be a first inkling that maybe the Fed has lost control here, in which case inflation in other areas than what we saw post-COVID will start to go much higher.
Mm-hmm. So I'm just curious, when it comes to sectors, Michelle, any that you would just definitely not even touch at these levels, other ones that might start to be looking maybe a little bit attractive to you as we get a bit more clarity?
Well, definitely in the big tech stocks, I would be really cautious. Microsoft, for example, dropped a lot again today and hit a major moving average it hasn't seen in years and years. But in terms of other things, I think considering we're seeing an outperformance in some of the consumer stocks like Shopify, also we're seeing some outperformance or a lot of outperformance in some of the EV-related stocks and the solar stocks. I'll be interested to see how Rivian reports next week. Some of the smaller tech companies that are hanging on to lows could have some upside, like a Palantir, like a 3D Systems. But we're being very careful. What we want to do more than anything is be able to have risk management where we have a wide enough stop to prevent getting blipped out on volatility, but not so wide that something turns into a major loss.
Yeah, it is interesting. I mean, it sounds like obviously inflation is here to stay. I'd be curious to know what your models say. But I think the big question that Americans have too, Michelle, perhaps wondering whether or not they should sell stocks, is, am I going to keep my job? If we have a recession, what is job security? What's your take on that?
Well, right now, the jobs report came out. There's still, about 500 million jobs open in this country. It was that may be high, but it's somewhere in the 5 number. But nonetheless, there are job openings. There's also people still not going back to work. And yet the people who are going back to work want higher wages. So it's very complicated right now to see what's happening with all these layoffs. I think that people are, by the way, the most Googled expression right now for people is inflation. So people are definitely worried about it. But consumers are still holding up the market. So it's such a I've never seen anything so complicated really in all the years I've been trading in terms of the equities market and the economy. I think that you have to look at the jobs number. Go ahead. I'm sorry.
Oh, no, it's okay. I was just going to say, we obviously speak on a regular basis. And I remember, I think it was back in the spring when we were chatting in one of our more recent times, Michelle, I had asked, when are we going to see these big time rallies, like a consistent, steady rally in the stock market that I think a lot of investors were used to seeing clearly before the pandemic? And I remember you had said it's going to take about 2 to 3 years before we can get there. Has that time horizon changed at all? What's the long-term view here?
I'm still thinking 2024, 2025 before we start to see any sustained rally. That's how long it would take for inflation to work itself out. Also, obviously, we have to see some type of growth in the U.S. economy beyond what we're seeing right now, which is based on consumer backs and housing. This is really, to me, a big situation right now is where is the growth going to come from? Will it be the digital age? Well, obviously, that's years in the making at this point. And as far as the upcoming election, maybe a good thing for the market, but certainly not for economic growth, is going to be gridlock, and that's most likely what's going to happen.
Michelle Schneider, always a pleasure. Michelle, thanks so much. Michelle's the Managing Director of the Market Gauge Group and author of Plant Your Money Tree.